So you're looking to raise capital for your real estate investment, and you're wondering, how do I tell this story? What do my investors care about most? In this video, we're going to cover the top 3 things that investors care about most when making an investment decision. Most of you don't know this, but I spent a year as a designer on the world's largest real estate investment marketplace. One of the things that my team did was we conducted research with 44 investors, accredited investors, people who've invested on the platform, to see what they cared about most when evaluating an offering. So we had conducted those interviews, but we had also looked at all the clicks and metrics and analytics of how they navigated the offering detail page. Using both qualitative and quantitative data, we're able to figure out what are the top 3 things. So I'm going to share those with you today. So the first thing they look for is, you guessed it, return projections. One investor said, obviously, the most important thing is returns, right? Is the return above a certain level for me to even go into researching that deal? So this is one of the main factors that influences their investment decision, but it's not the only factor. There are 2 more that reinforce this first point. So what metrics do you want to highlight? Well, there are 2 kind of different personas, right? There is the new investor, those who are learning, just entering in the real estate investment space. And then there are those who are a little bit more seasoned, have done a couple of deals. So what metrics do they care about? A new investor might be familiar with cash on cash returns and equity multiple, whereas a more seasoned investor is going to look at how the investment performed over a period of time through IRR. And in my opinion, it's important to highlight both, as it kind of helps educate the newer investor as well. Here's a pro tip. In a tough market like this one, reach back and pull out your historic returns. What this is going to do is it's going to help investors read between the lines, because you're probably underwriting your projections conservatively right now, because you want to be the syndicator who is delighting their investors with higher returns than promised, rather than those that are doing capital calls right now. And so having these historic returns is going to give people an overall picture of your entire track record, and is going to build a lot of trust, which is exactly the point of this whole thing. And by the way, 26 out of the 44 investors interviewed had noted that projected returns are the number 1 factor in their investment decision process. Now, speaking of your track record, you can't necessarily promise something through the projected returns without having the ability to back it up. So investors are going to be saying, okay, cool, I understand these projected returns. They seem high. I'm interested, but is this the team that's going to help me kind of achieve those returns? Because here's the thing, if you are promising them high returns, but you don't have a track record to deliver it, that's a trust buster right there. So how can you show that trust? Well, one way is to leverage a track record of similar projects. And so an investor might look at your track record and say, okay, from the last 10 years, out of the last 10, 20 deals, this is how they've performed. And what would be icing on the cake is if you show, here were the projected returns and here were the actual returns. So they can see that there is a track record of you delivering above expectations, and that's going to help them read between the lines. And in fact, this is the very same method that has gotten my wife and I to invest in the past in this very market through our LLC, because we looked at the syndicator's overall track record, the overall returns, and we kind of said, okay, like the returns that this deal is promising are a little lower, but on an average, can they deliver, and do they deliver higher? And if the answer is yes, that's a solid indicator that an investor should place their capital with you. So another way to build trust here is by highlighting your team's expertise. So this might be listing out their qualifications, your market dominance, and also you having previous experience within a certain asset class, one that you're raising for. So as a syndicator, your job is to build trust by offering clear, frequent communication, being transparent about everything that's going on. And in fact, if you've had a deal that went sour for whatever reason, it's better that the potential investor learns about it from you rather than when they're doing their own due diligence. And more often than not, this results in deeper connection with yourself and your team. One investor said, I focus on the quality of the project and the quality of the sponsor team. If those 2 check out, I'll want to invest. Another said, I'm starting to learn that the sponsor is very important. Initially, I looked at a bunch of deals and thought the internal rate of return is all that's important. Well, there's more to it than that. And the last big thing investors care about is a combination of a couple of things. And it has to do with their personal thesis and their personal belief in the outcome of this project. And a lot of it has to do with the location of the property. Is this a market that they believe in? Some people are reluctant to place an investment in a market that they're not familiar with because they have a personal belief about one aspect or another of it. And another part is, aside from location, is the asset class. Maybe this is something that just doesn't resonate with them and they just don't know anything about it. They already have a predisposed notion about how they're feeling about it. And if the projections are good, the sponsor team is good, but it just doesn't align with how they're, feeling about either the market or the asset class or their personal thesis, it might not be the right fit. One investor said, is it a hot and growing market? One of the first criteria for me is geography, said another. As far as the asset class goes, one investor said, at the moment, everything has pretty much been multifamily for me, because I think it's safer for now. This may change later on, but in this environment, I think is where I feel most secure. So how they feel is a really big important deciding factor for whether or not they're going to invest. There are education and approaches you can take to help them learn about the asset class and kind of help them make the decision. But it's not something that you should push, and instead seek more who are more likely to align with you on the asset class, on the market, the location, and giving them the opportunity to understand and learn about who you are, who your team is, your expertise, and also kind of help them understand what you're projecting for the returns for that particular deal, but then also offering up the historic returns to say, hey, this isn't our first time doing this. And based on these returns, you can reliably assume that this is probably going to go well. So at the end of the day, the top main 3 things that investors care about when making an investment decision are, does this align with my investment thesis? Do I believe in the market? Do I believe in the asset class? One thing you can do is to kind of help prepare your presentation in a way that educates them and makes them go, okay, this is really interesting. It's not something I've ever thought about before. And we're going to be making videos on how to present your offering at a later date. The other thing is your track record as a sponsor and your sponsor team. It's your job to communicate this in a clear way, in a way that allows people to really get to know you and feel you prior to making an investment without even meeting you. And so we have strategies on how to do that. And then the thing on top of that would be the investment projections, even though that's the top thing that most investors said that they cared about. So who is making the claim, and then what is the claim, and then does it make sense to me as an investor personally? So those are really the main 3 things. And by the way, the same goes for individual assets that you're raising for, or if you're raising for funds, it works just the same. So if you're looking to raise capital and prepare a presentation and tell that story to a potential investor, feel free to reach out. This is something that we help our clients with. So what we do is we help our clients take their investment opportunity and present it in the best way possible, put it in front of accredited investors, and then we have a system that nurtures them through all the different stages to make the final investment. So this is a really good way to wake up your IR team and infuse your company with new leads that actually convert. These are real people. These are doctors. These are engineers. These are mortgage brokers, insurance agents. These are actual people that get on the phone with the IR folks that we've been working with. And so far the response has been really, really positive. By the way, if you've benefited from this video, leave a like and share with anybody you know. Also, leave a note in the comments with any questions you may have as it pertains to marketing for your real estate syndication, and it just may be a topic of our next video. Going forward, the team here at Raise Ready is going to be creating videos much like this one, and we have a ton of topics lined up. So whatever platform you're watching this on, make sure to follow us, subscribe, do what you have to do to stay top of mind, and we'll see you guys very soon.